Hey everyone, this is Mark from Stocks and Cash. It's Sunday, February 11th, 2018. I'm here with your market update. I'm also going to go over my holdings, which actually I'm not holding anything right now, but I can show you what I closed out of on Friday. And then I'll also provide some potential trade setups for Monday and this week. So, taking a look at the SPY, we had our Doji candle that I had mentioned a few days back that I'd like to see to potentially indicate a bottom of this bearish trend. The candle alone doesn't mean that we've bottomed out, but it's it's potential. It's a potential indicator that we may have bottomed out. You can see that we opened, came down and tested this area here, bounced back up. We tested the 100 simple moving average at some point, and then it ended up closing right below this trend line. So a few things I would definitely like to see is certainly a close above this 100 simple moving average. Certainly like to get a close above the 8 EMA, as well as a close above this large bearish candle that we had on Thursday to kind of confirm a reversal in trend and potentially come and retest our all-time highs and see if we can go higher from there. So I am cautiously bullish. As I said, I'm not holding anything. I wouldn't buy anything in the morning, long or short for that matter. Again, we need some confirmation, I believe, before we start trending back bullishly. But I do think, in the short term, this move may be over. Again, we just have to see what happens on Monday and Tuesday in the markets before we get too excited and jump into things prematurely. So that's kind of my analysis on the SPY. Let's take a look at the Qs. So the Qs did come down and test the 127 Fibonacci target. We closed above this ascending trend line, closed above the 100. So the Qs are looking a little more healthy to me than the SPY is right now. Still want to get a close above the 8 EMA, the 55 EMA, this black candle. That will give me some confidence and confirmation that, hey, we're starting to kind of reverse trend here and come back bullishly. You can see we have a double bottom in the RSI, double bottom in the Stokes. MACD is still strongly bearish, but if we get a nice close, even if we don't close above the 55 or the 8, as long as we start showing progress, forming white candles that are approaching those levels, and we finally get a candle above there, the MACD should start to be crossing over or getting close to it. So I do like the idea of the markets kind of turning around at this juncture. But again, we need confirmation to come in before we can say for sure. So to take a look at what I did on Friday, on Thursday at the end of the day, I bought a bunch of puts. I bought a Facebook call thinking that we had bottomed out. So when the market opened, I truly don't remember what time of the day. I took a small loss on Facebook, small loss on Tiffany's. This was later in the day. And then MasterCard, IWM, John Deere, Goldman Sachs, and Michael Kors, all these were sold in the afternoon. When I saw we'd kind of double bottomed and were breaking above the neckline, I sold out of them. So these percent gains were higher. Earlier in the day, I did not get to sell out at the bottom, but I certainly was able to sell out or sell my positions and get a profit, prior to the reversal. So I'm happy that I was able to get out of these for some profits, small losses on the ones that I did have a loss on. So overall, it was a good day for me on Friday. And again, I'm all cash now, kind of just waiting for the right opportunity to get back in. So I am looking for some bullish opportunities, given that I believe the sell-off might be done. Again, might be. So let's take a look at a few setups potentially that might be notable on this week, early in the week. We got NVDA. Although it's been having some bearish candles these last 3 days, the close is well, not on this particular candle, but it's kind of, you can see there's like an uptrend, although not a strong one. The Stokes are starting to turn over. RSI is turning up. MACD is trying to cross over, or at least approach the point of crossing over. Given the weakness in these candles, I'd like to see a strong close above this breakout level of 249.93. But if we do close above it, first target would be 262, second target 278. So definitely looking for a nice close above this breakout line, and then I'd be confident in taking a bullish trade on NVIDIA. Now, if you are interested in taking a trade on NVIDIA, prior to seeing if we get to that breakout level, we did kind of stop above. We closed above the 8 EMA, closed above this 61.8 Fibonacci retracement level. So, if you want to be risky, you could play the 5-minute rule on open. I do believe stocks are going to be volatile still. I think the VIX is still up. But you could have a high risk, high reward type trade. Put your stop below the 55 EMA, and then see if it runs up. Now you're risking a lot. We closed at 232, and the 55 is at 216. So I mean, you're risking about $16. But if it goes higher, 232 up to 78, that's, can't do that math in my head, but around 40, $40 or so, a little over $40 for a $13 risk, or $16 risk rather. So almost a 3 to 1 risk reward there. Again, I personally would like to wait until we get a close above that breakout level before going into NVIDIA. Let's take a look at Kohl's. Kohl's had a nice pullback, kind of a double bottom here at the retracement level. We're still technically in a downtrend, but if we get some strong moves above this downward trend line, we start getting through the Fibonacci retracements. I think Kohl's is a valid play. Where you'd put your stop kind of depends on what our candle looks like tomorrow, but probably at the low of tomorrow's candle is where you'd want to put a stop, assuming that we do start closing above the 21 and the 8 EMA and show signs of moving upwards. Now, just a quick note, some of the stocks that I'm going to show you, most of them are retail. So if you do decide to take a trade on any of these, I wouldn't recommend doing more than one or two, because you don't want to be in one sector if retail for some reason tanks or doesn't follow the overall market. If there is a recovery, you don't want to be all in on one particular sector. That's my own personal advice, my own personal way I trade. It's nice to diversify. That's a Jim Cramer thing. I know some people don't like him, but I do think that point is good advice, to have a diverse portfolio. So moving on from Coors is the Gap. Sorry, I keep calling it Coors, but I meant Kohl's. The Gap touched the 100 simple moving average. We closed below the 55, and we're still below the 8 and the 21. If we can get a close above the fib retracement level, the 61.8 here, you could try and wait for the breakout, or you could play it at this level here, depending on where the candle forms. MACD is starting to turn over. RSI is up. Stochastics are kind of in no man's land, kind of not really in a direction, but more bullish than bearish. And you can see volume was pretty strong on Friday for the Gap. So certainly some opportunity there. And again, this is something I would wait until the end of the day and we get a close. If you're looking, if it's looking strong, I have a nice strong white candle that's closed above, the 21 and this Fibonacci retracement level, maybe in the last 5 or 10 minutes, buy a couple calls. It's totally up to you on how you want to play it, but that's kind of the mindset I would have going into Monday, assuming that the markets cooperate and we do start moving back upwards. Dollar Tree, we had a nice strong bullish candle on the Dollar Tree. Very similar story to the Gap. You want to close above the 8, the 21, and the 61.8 fib retracement level. Once we get above here, maybe you could take the trade. The MACD should be crossing over or close to it by that time. So that's kind of what I'd be looking for. Now again, you can buy your calls here, buy stock here, whatever you prefer, or you could wait until the breakout level, the 116 level, and then look for your targets here at 128 and 126. It just depends on how much risk and reward you want to put on your trades. A couple more here. Nike's kind of in a little triangle type pattern, but it had a nice strong bullish candle on Friday. Still, just about on the exponential moving averages. Definitely want to see a breakout above this descending trend line, get above the fib level here, the 61.8, and then you could potentially take a trade or wait until we get to the breakout level of let's see, what is it? Breakout level of, bear with me, 70, 61, and 72.96. So certainly some opportunities here in Nike if it corrects. Yeah, I shouldn't say corrects. If it reverses the trend and starts moving back bullishly again. And the last one, Tesla, for everybody. It had its earnings on Thursday. It was down with the rest of the market. Kind of had a bit of a recovery. Kind of touched the lows that we've seen before. Didn't come all the way down to 292 or 290. I don't think it's gonna, unless the overall market sells off. I don't particularly see it coming back down. It may come back and retest this 100% retracement from this move here. I guess it's possible that it could come down and test the 290 level. Anything's possible. But Tesla is bearish in terms of the MACD. RSI is down, Stokes. So I would not be looking to enter in bullishly right now, personally. If you own the stock, I think you can hold off and selling until you get to the 290 level. Then you might want to consider getting rid of some shares, or if you got calls, maybe closing up your calls and taking your medicine, take your loss here. But I also wouldn't be shorting Tesla. We're kind of in no man's land. Again, like the other stocks, I'd like to see some confirmation of a bullish reversal before getting in long. But I also don't think it's really in a position to short, just my position. So if anyone has any comments or questions, be happy to see them in the comments section. Have a great night, and we'll see you tomorrow.